I'm going to be working on something with the NASDAQ futures, and what that's going to be doing is allowing these trades to develop, and not only develop, but allow them enough space to kind of wiggle around. So today was a little bit of a frustrating day for me. Again, I'm used to when we have a specific pivot, I'm a trend trader. So when I break these pivots, when these pivots get broken, I'm looking for the move extremely quickly. Now, again, not every day is going to be perfect, and not every day is going to have those immediate moves. So what we need to do is understand ourselves as a trader. We also need to allow enough time and enough wiggle room for these trades to work out. Now, the only way that you can really do that is by using proper risk management, because remember, we are risk managers first, we are traders second. So again, a day like today, an open like that we had this morning, can tend to cause traders to start putting on more size to start catching smaller moves. So what you may end up finding out that's happening is when we start to get into a choppier environment and we're not getting those nice clean breakdowns or nice clean breakouts, what we tend to do is start to look for areas of opportunity where, well, if I go ahead and I play one mini or two mini contracts and I just take 4 or 5 points because we're bouncing with inside of a range, I can catch and make a little bit of money. What tends to happen is we catch one of them, we do it again, we give it all back, we do it again, we lose. So now we're on the wrong side of the probability. So what I'm starting to notice here on the NQ, because I'm looking at the 5-minute time frame a lot when I'm looking to trade the NQ, I'm noticing that an average true range on the NQ is anywhere between 20 and 25 points. Okay. So with that being taken into consideration, what I'm going to do is start risking 40 to 50 points per trade. Now, how I'm going to be able to manage that risk, some of you may be thinking, wow, 40, 50 points. Here's one thing that can tend to be stunting your development and your equity curve on your P&L, is that you're setting too tight of a stop loss. And what's happening is you're getting stopped out, and then the trade is going at a later date and time. You're getting stopped out, and then you're forcing a trade that necessarily is not aligning with your strategy. And when you tend to do that is when a trader tends to run into a lot of problems. By the way, guys, if you can do me a favor, like, comment, and subscribe to the channel, it helps these videos get out to more traders. 2, if you guys are interested in joining Evolution Traders, I have one space available at the current price. It's a lifetime price. You only pay once. You get access to everything for the remainder of my trading career and my life, right? Your life, whatever. It's one time. I don't charge a subscription. I have courses in there. You have access to my calendar. You have access to the live trading. You have access to the watch list. You have access to the community. That link's down in the description box below. So I want to play out my strategy here. What I've got marked out on the charts is the first hour highs, first hour lows, and then I had this new low that was put in once we did break the opening range at 335. Now, if I kind of use this model, which I'm going to be messing around with a little bit on a prop firm, if I use this model of at the current time when I'm looking to take a trade. So for example, we lost a 20 SMA here at 7 a.m. Pacific Standard Time. I would be looking for a short position below this price of 348. Okay. So below this price of 348, I'm looking to get in. Here's the problem that I've been running into. When we do confirm it, we quickly wick below and then immediately snap back. And when we snap back, I start going into drawdown from only being profitable a little bit and not enough to take any profits. And then what tends to happen is I prematurely am stopping myself out and then chasing it again once we break that level for the second time. You can see how the pattern can start to develop. You get to a point in time as a trader where once that starts to happen, you're almost on the verge of going on tilt. And I want to actually correct that problem that I'm having for myself. So that's why I make these videos, to kind of document, to kind of journal. This is an open journal for me. Some of you guys may be wondering, why do I make so many videos? It's because when I have a trade idea or I'm doing my back testing, I feel like this is a perfect opportunity to kind of let out my thoughts. So if I need to go back and watch the video myself, I can go back and watch the video myself. It's helped me now for about 3 or 4 years. So this is my form of journaling. So if I was to give myself the ATR, which is 20 points, around 20 points at this current time, and I just double the ATR, meaning I'm going to give my trade enough room to work, and I'm going to look for that 1-to-1, right? So if I'm going to risk 40 points, 50 points max, right? That's going to be my max. I'm going to look to make 30, 40, or 50 points. Okay. I'm going to look to make that 1-to-1, right? So what that's going to cause me to do is hold trades a lot longer. It's also going to force me to take a little bit bigger piece of the pie. And it's also going to force me to, when I take a loser, it's going to make me stay in that trade a lot longer, resulting in me not taking as many trades. Because remember, this is a game of probabilities. The more trades you take, the higher likelihood you have to lose money. So if it's only forcing me to maybe take 1, 2, 3 trades a day, essentially, if I am going to have a losing day, risking 40 to 50 points on 1 or 2 micros, the most I'm going to lose is $200. So even if I was to lose 2 trades or 3 trades, I would lose $400, $600. But you can see how 1 or 2 trades can put you right back in the game. And if you are able to make a winning trade or even 2 winning trades, you can see how you can have a quick $200 to $300 day, $400 day trading 1 to 2 micros, right? So if we look at this particular situation, I would have been getting triggered into this at 7:20 a.m. I would have had to have sit through a lot of drawdown between 7:20 all the way here till we really start breaking down at around 8:55. Which for me, now that I'm starting to look back at it, I think this is a little bit better of a way to approach the futures because of the range on the NQ is so much. Now, mind you, we're not always going to have to sit in these trades for over an hour, 2 hours. Sometimes we can get into a trade like this particular trade that sets up. Let's say, for example, we were going to get into this trade. You can see that this 20 SMA trade works out relatively quickly. Within 10 minutes, we would have taken our 1-to-1, right? So if you notice, if we have a 40-point stop loss here and we kind of look at our entry to where we wick down at, we would have been taking profits at 40 points, right? That's that 1-to-1 I'm talking about. If we were to get into this trade and put a 40-point stop loss, yes, we would have been in a little bit of drawdown. However, you can see that if I was to move this down, we would have essentially been taking profits in the same space, either this candle at 9 a.m. or this candle at 9:05. So this trade was a winner, right? Also, this trade was a winner using a double ATR stop loss. If the ATR is 1920, we're going to double that ATR and we're going to sit in the trade until we get our 1-to-1. If not, we're going to get stopped out over our box. Now look at when we do cross back above the 20 SMA. We have a trigger long position here where our stop loss would be anything below that double ATR stop loss, and our profit would have been here, literally at 1240. So this was a 1 trade here, a 2 trade here. Both of those trades won. Both of those trades you would have taken 40 points. 80 points out of the NASDAQ is what you could have taken today if you would have just allowed yourself to be a little bit more patient, allowed the trade to work out, and actually sit in the trades until they technically stop you out or you take profits. 1-to-1 trades here, 80 points on the market, 1 short, 1 long, depending on if you took the first one short. If you took the first one short, you could have came back into this play here and doubled up by adding another contract or starting a new position. So it's potentially 3 trades that did work out, or you could have just taken the 2, right? So again, I'm going to use this model, take these tips, kind of put it into your trading plan and see how it works for you. Again, if you guys want to join and you guys want to follow along on this process and maybe you want to trade with me like this, definitely join Evolution Traders. I've got access to all of the courses, kind of outlining my entire strategy and system in there, and you can start trading with the rest of the guys. I've got 1 spot left, like I've already mentioned numerous times. When this 1 spot gets filled, the price is going to double. So if you have been on the fence about wanting to join Evolution Traders, right now is the perfect time as we start rolling into the new year. Invest in yourself, guys. It's very key. Education is key. I'll see all of you guys on the next video.